Hello, everyone. How are you doing today? It's so great to see you. Hi. Hello. I'm so glad you are here. Thank you so much for coming for this special edition of Ask a CPA, where we have a pretty amazing guest with us. I'm going to hold off on introducing Paul later on, but as you can see, he's the dude in the room over there. Wave, Paul. Thank you. I'm so glad that everybody is here today. We're going to go over a few of our usual updates and good stuff that's going on that I want to make sure you know about. And then we're going to turn it over to Paul so that he can give us some information on reasonable compensation and give us a demo of their new features that are in beta that we're super excited about. Good morning to you too, Jessica. I'm so glad you're here. Shout out in the chat if you feel like being social. I am going to switch over to this view. There we go. For the recording. By popular request is the first thing I want to make sure that I share. I created a resource for Ask a CPA folks that lists all 6 of our preferred CPAs. So if you have clients that need tax prep or planning, these would be my recommendations for the best CPAs I know. I just dropped that link in the chat. It's in Circle under resources. Oh, Wanda is in snowy New Hampshire. Yes, I am in sunny Merida, Mexico, and I'm pretty happy about that, I gotta say. It's a lot hotter here than most people like it to be. It's about 96 degrees, which is perfect temperature for me, but I know is too hot for a bunch of people. I'm pretty happy about it. Paul has that's not actually, you're not on the beach with palm trees, right, Paul?
No, but yeah,
It's
would
a
prefer to
beautiful
be.
picture. It is a really
Yeah,
beautiful picture.
yeah. There's snow that direction that you can't see, but
Where are you? Where are you? I don't remember where you are.
oh, Denver.
Oh, you're in Denver. Okay, yeah. So you guys get plenty of snow. Well, speaking of amazing CPAs, our very own Marit Bermud made a resource on ideas of what to post on LinkedIn when you're stuck, which I thought was awesome. And she graciously shared that with us. I dropped that in chat as well. Veronica Fry got in touch with me and was just like, oh my God, this is gold. Like I was trying to figure out something like this that I could use for when I get stuck. And there were so many really great gems in there. So big thanks to Marit for sharing that with us. In our section on people we like doing cool things, I wanted to share Justine Lackey's 5-day free Get Organized Challenge. And I know that this is a really popular thing for Ask a CPA members. We have a lot of people who are nesties who have taken one or more of her incubator cohorts. And this one is the free version. So this is 5-day free Get Organized Challenge. If you sign up you got to sign up by March 15th, and then it starts the 16th and goes through the 20th. And if you use our affiliate link to sign up, that is a really great way to support Ask a CPA at no extra cost to you. So if you're curious about the Get Organized Challenge, I know last year she did the Modern Firm Challenge. And I'm going to hit mute here. Apologies. Give me just a second. There we go. Last year in September, she did the Modern Firm Challenge, and now she's doing the Get Organized Challenge. I don't know if she's done this challenge before, but everybody that I've talked to who's done her free challenges has gotten a lot out of it. So please sign up for that. If you're interested, also, we're going to be having her for another popular behind the scenes for the Nest. I just posted this last night. She actually is going to be here on March 19th, and I put that link in the chat as well. And this is by request of members, people who are like, I want to see what the Nest is about before signing up for it, or like in considering signing up for it. And so she actually takes us into her community behind the scenes and shows you the course and explains how it all works. But she'll also answer questions for us on just the business of running a bookkeeping firm. Again, we got quite a few members of Ask a CPA who have taken that and have really raved about it. So we're having her back. I want to mention again the WAVE conference in Seattle on May 15th, 2026, that our member Erin Pohan is running. I am having a birthday party the following day at my favorite bar from when I used to live there, and you are all invited. I am super excited about it. I know there are going to be a bunch of Ask a CPA people there, and if you have not signed up yet, you get $50 off your ticket if you use this link that Erin gave to us just for Ask a CPA. We would love to see you there. It's a one-day conference for women in accounting, and I cannot wait. I will be leading one of the tables at the Mentor Hour, and we will be doing a live recording of the She Counts podcast. So I'm super excited about it. I wanted to mention the referrals section in Circle because Caroline posted just, I think, yesterday or the day before, I'm putting it in chat, about someone in San Jose, California who's needing nonprofit bookkeeping. So if there are any people on this call right now who are nonprofit bookkeepers, if you service that niche, click on this link and get in touch with Caroline and she will pass along that referral to you. A reminder that there are loads of really useful resources in Circle that are included for members only. And for this session, I want to remind you very specifically about the reasonable compensation resources we have for you. Many of them generously donated by our friends at RC Reports that Paul was the founder of. There is lots of great stuff in there, whether you provide these services or not. There are client resources. There's stuff that's just good to know, especially if you're thinking about working with one of the people in Ask a CPA who does do reasonable compensation analysis. So that is in the event for today's guest appearance with Paul, but it's also in the chat for you right now. There was a 2-hour session that was really a deep dive that I did on this. This is going to be a much shorter session. So if you haven't already watched this and something that Paul shares with us today piques your interest, you might want to go back and look at this 2-hour-long session, look at those resources, and then sign up for RC Reports because that's the best way to do it. Most recent Ask a CPA recordings, the tech tour with digits is up. And the most recent Q&A and the orientation that we did last week will be up hopefully by Tuesday. And you can go to the recordings section in Circle. I just dropped that in the chat for you as well. Upcoming events. We've got a lot of them. I am super excited about what March has for us. I just put the link in chat, but also I'm going to put the whole list here. So we've got today, obviously, Paul from RC Reports. And then on Friday, March 13th, we have our first Q&A of the month. We have Justine Lackey's visit on Thursday, March 19th, a study hall on Friday, March 20th, and the second March Q&A is going to be on Wednesday, March 25th. Then I've already got the first Q&A for April. That's going to be Friday, April 10th. I've already got that one up in Circle. But in addition to that, and I'm going to put this whole link in chat because I know I'm going through them pretty fast. In addition to that first Q&A in April on Friday, April 10th, which I'm calling the final countdown, because that is going to be our last Q&A before tax day itself. And then as a tax day celebration, the day after tax day, we are going to have Jeannie Roosh coming to visit us. She is a marketer who specializes in working with accountants and bookkeepers and helping us find our personal brand through telling our story, which I just love. And I met her through Theater of Public Speaking, and she's just delightful. And I was so glad when she offered to do a session for us. So that is going to be a big day after tax day celebration on Thursday, April 16th, I will probably have a glass of champagne in my hand when we're meeting, and I'm looking forward to that. Then we're also going to have another study hall on Friday, April 17th, and then I'm going to take a quick little vacation and be back for our regular session, our second session of the month, Wednesday, April 29th, in our usual slot. That is all I have for this list now. And so I have the very great honor of introducing a good friend of mine, one of the most sarcastic people in accounting, which is a compliment. I asked him if there was anything particular he wanted me to say about him, and he said, well, as long as you keep it flattering. And I was like, that's no problem whatsoever, because I love this guy so much. So let me tell you a little bit about him. Paul Hamann is the founder of RC Reports, RC standing for Reasonable Compensation. And I saw Paul on CPA Academy in 2016 and was like, I need that product. I was so excited about it. I immediately jumped into learning everything I could about reasonable compensation. I signed up for RC Reports. I took every class that he offered on CPA Academy. I had great success with doing reasonable compensation for my clients and helping other people learn how to do reasonable compensation. And at some point, I reached out to him and I was just like, hey, I want to meet you. I'm just a huge fan and I think we should know each other. So, I was nervous because I'm like, he doesn't know me from anybody else, but it turned out he like remembered me from some of the chats in the CPA Academy sessions, and we knew a lot of the same people like Misty Mejia. And through him, I got to meet a bunch of other great people because good people know good people. So it was through Paul that I met Gaynor Milkey, who I know a few of the people in Ask a CPA work with on marketing. And then I got to meet him in person at conferences. And that was especially fun because he's a lot taller than I am. And you can't see the height differential right now because we're both sitting down with beautiful palm trees in our backgrounds. And so we ended up taking a picture that was really, really funny of me, 5'2", standing on a chair. And the picture that you see in this event, I think maybe half an inch or 1 inch taller than him. I am standing on a chair in that picture. Paul, how tall are you?
6'4".
All right, 6'4". Okay, so 5'2" and 6'4". So I stand on a chair. We take this fun picture. We get to know each other well. They end up inviting me to do some presentations on behalf of RC Reports, which I was delighted to do because I'm such a huge fan. There is no other competition, I always say, in the industry for calculating reasonable compensation. They're the only product out there that does it. I always say that the main competition that they have is ignorance because people don't realize that this is something that needs to be calculated, that there are court cases that determine how it should be calculated, and that their software is designed to do exactly that and to be in compliance. But it's not just compliance, it's also value-added advisory services because you can really save your clients. You can make sure they're paying themselves enough, but you can also save them money on payroll taxes if they're paying themselves too much. So Paul and I, through the years, ended up continuing to hang out both in person at the conferences and in Zooms because he's just a great guy, fun, sarcastic, and generous and kind. And I was thrilled when he said he would join us here today. One of these days, I'm going to make a compilation of all of the pictures we have of me standing on a chair next to Paul so that we can actually be anywhere close to the same height. I don't think I've ever given you a hug, Paul, because you're just too far away.
Just chair hugs.
Just chair hugs. So thank you for being here. Paul, welcome to Ask a CPA.
Thank you, Nancy. When we were looking back to figure out when we started to get to know each other, and then while you were just talking, Nancy, I'm like, holy crap, that's a decade.
It's a decade. Isn't that nuts? We've
It
actually known
is.
each other for 10 years. Yeah. Yeah. It's hard to believe.
It is. And Nancy is, well, I'm not going to tell you anything you probably don't already know, but she's one of my favorite people. And as far as I know, and reasonable comp is a really small niche. Nancy is the only other educator I know who does a deep dive on reasonable compensation besides myself.
Oh.
And hers is a kick. So that 2 hour one that's down there, when I leave you with a bunch of questions here in a little bit, you can get them answered in there. Because I'm going to hit some high level stuff and really help you kind of understand it at a really high level. But when you want to get into the nitty gritty of it, that is a super, super 2 hour course.
Well, thank you very much for the compliment. I appreciate it. I do want you to do a brief review on what reasonable compensation is, but I think the thing that many of us are most excited about is seeing the new stuff, the new features in the software, because you've got some things that I'm really, really excited about coming down the pike. And as it mentioned in this event, anybody who is a member of Ask a CPA who currently has an RC report subscription or signs up for one at any level will, if they would like, get early access to these beta features that he's going to show us today, which is again super kind and generous of you, and we really appreciate it, Paul. So take it away. I will interrupt regularly, probably heckle occasionally, and if anybody has any questions, please drop them in the chat. I'll be monitoring it.
Absolutely. All right. You all should be seeing my screen at this point in time. And I am excited to share with you the new features that are coming out. We're really excited. When Nancy and I were talking about doing that today, I said, only a few people out there, thought leaders, have seen these. So this will be the first public group, so to speak, that'll see these, and they're going to come out right after tax season. But most of them are fully operational. Some you're going to see need a little bit of work still, but it'll be fun to share them with you.
Which means we are a really special group, right?
Absolutely. Are you kidding? A Nancy group?
The Nancy group.
100%. So happy to answer questions as we go along. I'm going to hit a high level on reasonable comp. Most of the time, when I'm talking about reasonable comp, I'm talking about compliance. And when you think about it, that's probably where your mind goes first. But Nancy just mentioned this as well. There's a lot of advisory opportunities around reasonable comp too. So we're going to touch base on those as well. Really only a few things to know about me. I live and breathe reasonable compensation. I spend the majority of my time doing what I'm doing right now, which is education, which I love to do. If I'm not doing that, I'm generally consulting on reasonable comp, either reasonable comp challenges in tax, or it comes up a lot in litigation as well. And if there's a little bit of time at the end, Nancy, we were just mentioned in a court decision, which was huge for us. I mean, that almost
my
never.
Gosh, that's incrable. Let's make time at the end. I'm going to make you stay late if you haven't gotten to it by the time our hour is up, because I want to hear about that.
Yeah, so that almost never happens, and there's some reasons why, but it just recently happened, and it only took 15 years. So. Not that we haven't been used in multiple court cases, we have, but to actually be mentioned in a decision is really cool. So it's a fun brag. If I'm not in the office, I live in Colorado. I'm up in the high country. I'm hiking with my chocolate lab. He's very photogenic. His name is Remy. He's around here somewhere. And he's on our website under who we are. He's our chief people officer because, well,
he's a chocolate lab. Say no more.
All right. So in reasonable comp, probably the biggest blocker, the biggest challenge are the amount of myths that are out there. And so I think this is just a really good way of demonstrating how many myths are out there and how much they've been adopted as fact. So I've asked this question, or our company has asked this question now for many years. I think we have over 250,000 responses to this polling question. Which of the following methods of determining reasonable compensation are recognized by the IRS? So A is the industry rule. So we're just going to set reasonable comp as a percentage of something like net sales or gross revenue. B is the 50-50 rule. So we're going to take that entire bucket of money and we're going to take half of it and pay it out as W-2 and the other half as a distribution, sometimes referred to as the 60-40 rule. Safe harbor rule, let's just go ahead and set that at the Social Security maximum. All of those or none of those. So again, 250,000 plus tax advisors, CPAs, bookkeepers, EAs, you name it, we've asked this question too. The correct answer here is none of the above.
Yeah, which is what 100% of the attendees today have put into chat because, boo, 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 these people know their stuff, Paul.
All right. I
They're not
don't
going
have
to fall
chat
for
open, but
this.
if you guys put that in, you guys are way beyond.
Every single person here has put E in there, except for one who said Remy is so handsome.
That's an answer, just not to this particular question, but I love it. Here's what's scary. Roughly 3 or 4 people polled believe at least one of those. And that's a problem because they're operating under the myth. They're likely telling their clients the same information, leaving both of them at risk at some point in time if reasonable compensation is challenged.
This really freaks me out. Like it is absolutely amazing because I have asked this question over and over again in sessions and I get the same kind of response. Like it's really nuts. And of course, these are the people who I bet the number's actually a little bit higher because these are just the people who are participating in reasonable compensation education, right? Like you're asking the people, I'm asking them when I'm presenting at conferences, you're doing it at, at conferences and webinars. And so my guess is that it actually is even worse in real life if you look at the people who aren't even aware that they need to be taking education in this area.
Well, that's scary. I hadn't thought that far out. All
Leave
right.
it to
Well,
me to be the doomsdayer, Paul. I'm very good at it.
no, that'll be what I'm thinking about while I'm lying awake tonight.
You're welcome.
There's really good reason for why so many of these myths are out there and they're believed. They're all over the internet. Some from what you would think would be a source that would have better information, people with large followings. Some people have magical payroll matrices.
Oh my God,
Or
this guy makes me crazy. So ChatGPT will always pull up Mark Kohler and he just drives me nuts. There are so many things that he says. It's not just reasonable compensation, but it's frustrating because part of the challenge that we have, which Heather mentioned in the chat, she said, telling my clients CPAs they're wrong is always a fun challenge. And that RC Reports has a really good resource to send them, but getting them to read it is the biggest hurdle. And I absolutely agree. And part of the challenge is that you've got people like Mark Kohler out there spreading this misinformation, but it looks really convincing, right? Like it looks, and at least half of what he talks about on other topics is accurate. And then half of what he talks about isn't. So how do you figure out what's real and what isn't? It's really tough. And I kind of like, I don't blame tax pros for being so confused about this topic, but that's one of the reasons I want to focus on the education for the bookkeepers themselves, because bookkeepers are looking at these books year round, right? They're not just coming in once a year when it's too late to adjust the W-2 for the prior year for reasonable compensation, by the way. Bookkeepers, the people who are in this group, they have personal relationships with their clients. And even if they have trouble convincing the tax pro of it, at least they can hopefully convince the client of it. But yeah, they're battling against a lot of myths, Paul.
yeah, and I know what you're talking about with Mark. There is no safe harbor rule, by the way. However, this is my favorite one. You get to choose, right? It's your company. And by the way, I've never been audited on this. The IRS has never looked at any of my customers. And by the way, become one of my customers because the IRS has never looked at me. And by the way, I just went on the internet and told that to the whole world. So I don't know where the bullseye is now, but I don't
I
know that I would
can't
go out there and
wait
yell
until
that.
the IRS really really starts leveraging social media to go after people like this and their entire book of clients. I am delighted for that day. Bring it on.
So yeah, so there's a lot of reasons for the myths out there, but what reasonable compensation is, I'll give you the IRS definition. Don't use it with your clients. I'll give you a better one. Reasonable compensation is the value that ordinarily be paid for like services by like enterprises under like circumstances and must be both reasonable and for services rendered. Have you already lost your customers or your
Yes.
clients?
And not
I might
only
have
that, but
I might have
let's try
lost
to,
you all.
yeah, right. Let's pick out just the words on here that make any sense whatsoever to a normal human being. And even those don't make sense, which is you're comparing like services by like enterprise under like circumstances. Like, there's nobody out there who provides my services in the format in which I provide them under any circumstances whatsoever, much less the circumstances under which I have to provide them. Like, it doesn't exist. It's apples to oranges. So, like, I would argue that even if you could get past the mumbo jumbo on these, in the code section, which they give you practically nothing to go on, even once you dig into it, it doesn't make any sense.
Yeah, this is not the way to go with your clients, for sure. But I recommend you think about it as either replacement cost or fair market value. And so we're going to talk a little bit about Scott Stone today. Based on a real business owner, we have a whole case study. We're not going to go into that today. We just don't have time. Oddly enough, he's out of Chicago, somebody I knew for decades.
Really, out of Chicago.
Yeah, so he ran a concrete company. He started it as a young man. So let's think about replacement cost in terms of Scott Stone. So Scott runs a concrete company. So when you think about replacement cost, think about if Scott had to step away from his business for an entire year. For whatever reason, maybe he was injured, maybe he's backpacking across Europe, whatever the reason is, he has to step away from his business and bring somebody in to perform all the same duties and responsibilities he was providing. What would that cost him? Right? That's the concept of replacement cost. And the flip side of that coin is fair market value. Again, Scott Stone closes up his business, but he finds another concrete company nearby that will hire him to perform the same duties and responsibilities he was providing at his company. What would that company pay him?
Now, one of the reasons that I find that extremely frustrating, and I prefer the approach that you're using in RC reports, is that in both of those situations, you actually have to go in and figure out, well, what did he actually do for the company? Because if you were looking at this in terms of, our own businesses as bookkeepers, do we do bookkeeping 100% of the time? Like, no, we're running our businesses and we're managing relationships with potential clients and existing clients and team members and vendors. And we're attending conferences and we're doing continuing education and we're learning about reasonable compensation, right? Like, there's way more to it. I love that you encourage us to talk to our clients about it in these very simple terms.
Absolutely.
But
Yeah.
it's frustrating too.
Yeah, and it also gives you a really high level way to stress test with your client. So when your client says, I'm paying myself $24,000. Well, there's this concept of replacement cost. So if you stepped away from your company, could you replace yourself for $24,000? And so it can be helpful to use it also a little bit as a stress test. But you're right, all the hats that Scott's wearing, that's what we're trying to replace in
Yeah.
replacement costs. And so we'll talk a little bit more about that.
I am glad that you brought up stress testing, though, because one of the things that I think is extremely important for bookkeepers to recognize is that even if now I have said it 1,000 times, I think bookkeepers are more, they're better positioned and in many ways more qualified, especially with education like yours and ours and Ask a CPA, to actually calculate reasonable compensation than most once a year tax pros. However, because this is not something they teach as part of the CPA exam, they do not teach you how to calculate this. A CPA has no better inkling on how to do this than any bookkeeper does. That is, it's not part of the curriculum, right? But one of the things that I think is really important to mention is that even if for whatever reason you decide not to be the person who's calculating reasonable compensation yourself, knowing that it is something that has to be calculated is extremely important. And the stress test that you just mentioned, Paul, I think is really important in that way. You know, if you see that somebody's paying themselves a certain amount of money, one of your clients, you can see how much they're paying themselves. And you know, say, oh, well, what are they doing? Well, they're a concrete pourer or they run a concrete company, you know, try to figure out, well, what do other people in that position make? And if it's nowhere near what your client is paying themselves, then you probably have a problem on your hands. So that is something that all of us can do, even if we're not going to take that next step and do the calculation ourselves.
Uh, Very true. And Nancy, you're going to love our new feature that's coming out, which will do exactly what you just said, but on a much more scientific level.
Okay.
So we'll get there. I'm going to run through the basic advantage of distribution over wages. Is that applicable?
Yeah.
I thought it would be helpful. Again,
I
we're
think so
talking
too.
about, I'm sorry.
I agree. I agree.
Oh,
Most of the
perfect.
people in here probably already know this, but just in case, I think it's
Just in
important
case,
to
I'll
mention.
just run through it. So most S-Corp owners would prefer distributions of their S-Corp profits over wages because wages are subject to payroll taxes and distributions are not. However, to prevent S-Corps and their shareholders from avoiding payroll taxes by maximizing distributions and minimizing salary, the IRS requires shareholders who perform services to pay themselves reasonable compensation. And so
Can I
don't get,
interrupt you for a moment? Because
yep,
there is a thing on this slide that I know that some of our members in Ask a CPA are going to notice and ask about. And so I just want to, uh, right off the top here, I'm just going to say I recognize this slide is not 100% correct. It's not that wages and salary have payroll taxes on them and distributions don't. It's that wages and salary have payroll taxes on them and the allocated profit, the profit that is flowing through, because all of the profit is going to flow through as taxable income, and that is not going to have payroll taxes assigned to it. Then we take a distribution of the profit, and that's a non-taxable event. So I wanted to make sure that people understand that. I actually don't use this slide when I present on it. I present on it because I made a new one because
so
I want to
yeah,
make
so
that clear.
distribution should be the flow through that's not W-2 wages, the piece that would be on your 1120S.
Yeah.
Um, but when you're thinking about substantial services, this is how the IRS puts it. Don't get hung up on the word substantial. Just think that if an S Corp owner provides services, they need to be paid for the services. And it doesn't have to be full time. It can be part time. There's a lot of S Corp owners that don't put in full time. So we met Scott Stone a
I want
little
to add
earlier.
something there
Yeah.
also, Paul. I told you I was going to interrupt you a lot. I would say my biggest success ever with reasonable compensation was when I had an electrical contractor who, when he started out, was doing everything himself, and then through the years hired people. He eventually hired a manager. He got to the point where he was working 5 hours a week, and we were doing regular reasonable compensation analyses for him. So his company made more and more and more and more and more money, and he got paid less and less and less and less and less W-2. And we had RC reports to thank for all of the payroll tax savings that he ended up having. And I actually had my own tax CPA, Julie, who works in our firm, question his number. She was like, Nancy, this is never going to hold water with the IRS. He's making, I don't know, $300,000 in profit, and he's only taking $24,000 or something like that. And I was like, he literally like checks and he texts his manager, and and the manager like occasionally has a question for him. And like Max, he's working 5 hours a week doing pretty much nothing, right? Like he's not even, we were handling his bookkeeping. He's not even nothing, right? And so it was a huge savings. It was an absolute huge savings, and you could absolutely see, on a chart how those were inversely related. But that's kind of what you want. I mean, it's what I wanted. I screwed up, and that's not at all what my chart looks like for my own business. But in theory, you want your profit to go up and up and up and up, and your W-2 to go down and down and down and down because you're pulling away from the business and living the life that you wanted to create for yourself. I know a lot of people want that. So that's probably my biggest RC reports success story was exactly that kind of situation.
Yeah, and that's definitely one you want to have the backup for, right?
Yeah,
When they look like they're going to throw a red flag, you want to, it's okay to throw a red flag, just know that you can back it up.
exactly.
Absolutely. So Scott's company has 175K in net income, but we haven't paid Scott anything yet. We're going to ask Scott to take the entire $175,000 out as wages, as a reasonable comp. So that's all going to flow through to his 1040 on a W-2. Payroll taxes on the whole 175,000 at 15.3%. It's going to be 13,387 for Scott and for Stone Concrete. It's going to total out at, with federal and state unemployment, it's probably going to be over 27,000. Next example, we're going to start at the same place, but now we're going to have Scott take everything out as a distribution.
Yeah,
So
bad
no
idea.
reasonable comp.
Bad idea.
Bad idea, but yeah, not
But for
uncommon,
illustration
unfortunately.
purposes,
Yes, for
excellent.
illustration
Yeah.
purposes only. Yeah, don't try this at home. So that $175,000 is now going to the 1120S, making its way to the 1040 on the 1120S. And there's no payroll taxes on Scott. There'll be payroll taxes on the other employees, of course. So Stone Concrete will owe nothing, neither will Scott. Total payroll tax liability in this case is zero. Roughly $26,000 in savings. Probably think of something to do with that money. So there's a tremendous motivation for shareholder employees to minimize their salary in favor of distributions. But the IRS has other plans. Distributions and other payments by an S-Corp to a corporate officer must be treated as wages to the extent the amounts are reasonable comp for the services provided. So this is how it should look for Scott. This is how it should look for all S-Corp owners. We want to know what his replacement cost is. And we'll work through this a little bit and show you how we come up with 92,000. But in this scenario, W-2 wages of 92,000 and 83,000 is going to flow through on his 1120S, or he can take out as a distribution. So payroll taxes on just the 92,000 are 7,038 for both Stone Concrete and Scott. Total 14,000. It's going to save him $12,700. So in a nutshell, that is the advantage of becoming an S-Corp for a lot of small business owners. Keep in mind, though, that that 92,000 for Scott in this scenario, think of that as kind of his crossover point. If he's making less than that, this is where knowing what his reasonable comp is helpful, because suggesting he goes to an S-Corp might not make sense if we're just looking at it from a payroll tax standpoint.
Yeah, and that's one of the things that people come to me all the time wanting help with entity choice. And this is one of the things that we do. And I used to have to do this manually because RC reports didn't used to have the little calculator in there about how to calculate what the advantage about electing S-Corp treatment would be. And of course, it's gotten a lot more complicated with TCJA and QBI, qualified business income deduction. It's not an obvious thing. It's not a slam dunk. And so one of the guiding tenets that I use and that we talk about in the reasonable compensation deep dive is when the person is generating, the shareholder employee is generating 100% of the profit, chances are their reasonable compensation is going to need to be a lot higher than if they have an investment that they've leveraged. So whether that's payroll, right? They're at risk for making sure their people get paid, whether or not they are getting the company is getting paid by their clients. And then equipment, like if you're investing a lot of money into equipment that's going to help you build widgets. So the farther away you get from being the thing that is creating the profit, the lower your reasonable compensation usually will be. And so it's when I interview somebody and I say, well, are you the only one doing all the work? Or do you have investment that you've made, equipment or people who are generating that profit sort of on your behalf?
Yeah, that's the advantage of owning a company of any sort, right? Is leveraging
Mm-hmm.
your equipment and the people around you, um, and then factoring that in. Uh, Nancy, did you know that they updated the CPT 61 a couple of years ago?
I sure did, Paul. Tell us about that.
I've seen a number of versions of this over the last 15 years. This is the strongest version I've seen calling out reasonable comp. It's no longer optional. You must determine what your reasonable comp is.
And I have a thing here that I just got to add. The fact that the IRS has now put this language, even though they have almost no reference to it in the actual code, but they've put this language on the S Corp election confirmation letter means nobody can say, I didn't know. Nobody can say, oh, that language in the code was really confusing. Nobody can say that because it says right here on their S election acceptance letter, you must do this or else. Okay, it doesn't say or else, but it's from the IRS, so we know what they mean.
Or else is always implied.
Yeah, it really is. I love this. I actually was really, it was big news in our world when this became part of the CP 261, which is this S Corp election letter. This is the letter that all of us as bookkeepers are trying to ask our clients for a copy of, and they never seem to be able to find that one.
So, funny piece of trivia before I move on here. When this changed, which was at the end of 23, beginning of 24, somewhere in there, um, went to the IRS website. I noticed it was updated on there. But when you go to the IRS website, where it says starting January 1st, 2023 on your screen, I think it says January 1st, 2016 or 2017, something like that.
Oh, really?
And I'm like, there's no way I missed this for 7 years.
No.
So I started digging. I reached out to some my contacts at the IRS, and they're like, "Oh yeah, we updated most of that, but we didn't bother to update some of the other pieces of it." So it's just a screen image for the web, and they didn't update it.
Wow.
So it looks like it actually was updated in 2017. But fun
That
trivia.
is amazing. That is a good piece of trivia.
Anyway, it was just bugging me that I thought I had missed this update for 7 years. I'm like, how could I have missed that? Anyway.
You didn't.
Um, The IRS has the right to recharacterize those distributions as wages if they were paid in lieu of reasonable compensation. That's 7444.
And what
Any
that
of
means in real English is they will go back. They will go back and they will say those distributions that you took actually should have been treated as W-2. And when that happens, it's not just your W-2 that changes. Everything on your tax return changes. You might no longer be eligible for credits that you once were. All sorts of stuff can change your eligibility and limits for your 401k contributions. I mean, it's a big deal when something gets recharacterized retroactively.
Yeah, it is to say the least, because I've consulted on a lot of these. It's a bit of a train wreck when you have a recharacterization. You do not want to have it happen. It is incredibly expensive. It's not just the payroll taxes. There's a whole host of other domino events that happen from that depending on your situation. But 7444 that gives them that right answers a question. Ever have a client say, I don't really want to set up payroll. Let's just pay myself 1099, right? We don't want to go through the
Literally
hassle,
every person in this call.
right? Just reference 7444, right? Can't do it. Corporation pays its employees via W-2, whether you're a employee or a shareholder employee. So it's
And I was
easy.
having a conversation with somebody just this past week and ask a CPA about, I think actually it was Wanda Jackson who's in this call, about the order in which we have to look at um, the IRS has guidance and like the website doesn't count at all as guidance, and revenue rulings in this case, number 74-44, they are pretty high up there. So like a revenue ruling means it's pretty much practically as important an authority as if it were in the original tax code. It's really high up there. Can't get around it.
Nope. Yeah, and in my deep dive, I go into the court cases and the people that tried and how that didn't work out.
I do love your deep dives. I gotta say, I really, really, if you're a big nerd like me and you're really interested in the court cases behind this, CPA Academy and also the RC Reports website have your sessions where you actually go through each one of the court cases, and they're really interesting.
So yeah, I mean, for me, I'm a reasonable comp nerd, so yeah, I get into them as well.
Yeah.
And if you're really nerdy, you can Google job aid for IRS valuation professionals. This was an internal job aid that came out to the public through a Freedom of Information Act. We're not going to get into it much today. There's two things I want to point out. One, it contains the actual methodologies that the IRS recognizes. On the first or second page, it points out something that is in many other places in IRS information, but companies have the burden of showing that compensation is reasonable. Whatever number you put down, right, it is the business owner's responsibility to be able to back that up. So how do you determine reasonable compensation? I'm going to run through this really quick, Nancy, but there are three approaches in the job aid. The only one we're going to talk about today is the cost approach or the many hats approach. It's the most common one used for S-Corps. The other two are marketed income. And again, take one of our deep dives if you want to learn more about those.
Or just ask me.
Yeah. So the cost approach breaks the time spent by an owner down into the various tasks that are performed. Wage levels are assigned for each task based on the owner's skill level or proficiency, and then it's added back together to come up with a hypothetical replacement cost.
And if you haven't taken the 2-hour Ask a CPA webinar on this, we actually go through an exercise where we do this together step by step.
Yeah, because you can kind of build that out in parts and pieces.
Yeah.
And so then we come up with what that hypothetical replacement cost is for the owner using comparability data. So at RC Reports, we have the most comprehensive wage data set that I know of. And so we began building it 15 years ago. We have wage data for every occupation and industry from 2001 forward. What's different about our data than any other data set you're going to find out there is we built ours specifically for litigation and for examination. Mm-hmm. And so it took us a while to prove that out, but we proved it out in tax much earlier, but it was really awesome to see that just pop up in a court case. When do you use it for what you think about as smaller micro-sized businesses where the owner's wearing multiple hats? So we met Scott Stone a little earlier.
And I'm going to interrupt again to say the Scott Stone example that you're talking about is actually in the 2-hour session that we have. There's the example that we work through together. And then as resources at the very end, there's a good example of Scott Stone, and it actually shows all three approaches. That's from RC Reports. They gave us those case studies.
So let's dive in. Let's get to some of the cool new stuff, Nancy.
Yeah, I'm excited.
All right. So those of you who are already using RC Reports, you're going to see some subtle changes in here. You'll see more changes after tax season when we roll everything out. But we're going to pretend that Scott's a brand new client.
And so this is the usual dashboard when you sign into RC Reports. Yep. It shows you all your clients. You know, you can look at the existing reports in there and you can start a new client, which is what Paul's done right here.
Yep. Some of this will probably be new to you as well, Nancy. Mm-hmm. So normally I have a client built in here, but some of the new features actually have to do with adding a new client.
Oh, good. And this NAICS group that he's looking up, that's the North American Industry Classification System. And
Oops.
it is what I was actually just talking with somebody earlier today or yesterday in Circle about how there's a modified version of this that's actually on the tax return. So if you want to know what industry your client is in, and you look on the tax return where it says activity code, that is going to not be as detailed as this NAICS number on here, but it'll give you a start. It'll get you into the right section.
And that's almost always somewhere in the business records is the NAICS code.
Yeah.
It's almost always there somewhere. Um, so these are required. Down here is optional, but there's two fields down here that if you fill in, one is zip code. So Scott's in Chicago.
Woohoo! I forgot that your example was in Chicago. I love that. It makes me happy.
And number of employees. And so as soon as I put in number of employees, you're going to see this turn down here from red to green.
Oh, that's new.
And so I'm going
All
to take just a
right.
half a step back.
Now you've got entity type that you haven't filled out yet. Is that on purpose?
We can put S-Corp in there. It's just not
Okay.
required.
All right.
Yep. External ID plays a role. Phone numbers just for convenience for you all. But taking a half a step back, about 2 years ago, we started building what we call benchmarking now. And benchmarking was designed to come up with a range for a S-Corp owner based on all the other S-Corp owners that are out there that have run reports with us over the years, hundreds of thousands of them, and in our wage database. And we began building it for the IRS because under Werfel, he's like, hey, look, let's get some innovation going. And so you would connect with people in smaller regional offices, and that's what we did. And we said, hey, would you guys be interested in a tool like this? And they said yes. So we're like, great. We didn't actually know how to build it yet. But what we learned in working through the process is that we had to be able to do it with almost no information because the IRS isn't going to go out and gather a bunch of information to use a tool like this. They want to pull it from the records that they have. So long story short, all we need to benchmark is the NAICS code, the zip code, and the number of employees.
Wow.
That's
Really?
that's it. That's all we need.
I love it. Okay. So what happens?
So it takes a few seconds because we're actually running through quite a bit of information to build this
A massive database.
in the back end, but we've determined that the benchmark, again, this is for somebody in Scott's industry, in his location, in a company of his same size. We're not saying that this should be Scott's reasonable compensation,
Right. This
but
is
we're,
the what you started out your presentation with, and and you look at, fair market value of
yep.
that. That's what this would be. And that's a wide range. But I
Yeah, that's
love
a pretty
that.
good size. Yeah, it's a pretty good size range. So when we were talking a little bit earlier about risk, right? If you have clients that maybe aren't interested in doing reasonable comp or CPAs that aren't, and you can at least benchmark the number to get a sense of whether they're in the right place or not is really helpful.
Yeah. Oh my gosh, that's fantastic. This is like the best stress test. So, does this mean this is how I'm picturing myself using this? I currently require clients to do a reasonable compensation analysis every 2 years, and yes, they have to pay me for it, but it's also a requirement. Like they're not going to get out of doing it. I'm not going to do their books. I'm not going to prepare their return if they don't. And they don't complain. Like they know it's good for them. That it might even save them money. But in those off years, I could always just do a benchmarking and be like, they're close enough. They're still within that range. Or when a new client is coming on and I'm deciding about like, how do I prioritize all of the zillions of things I have to do about, you know, getting them cleaned up, I could look at what they're already paying themselves and see if it's in this benchmark range and go, I don't have to worry about this today.
Yeah, absolutely. So because I've seen so many challenges, I like to have a report on hand because I've worked on a number of challenges where comp was actually reasonable, but they couldn't back it up. So the
Mm-hmm.
examiner said X. We went back in, we did all the background, all the work, and we came out with a number that was really close to the original Y. And
Yeah.
it goes away with a no change letter, but it was painful to get there.
Yeah, and I want to
So
explain briefly a no change letter for bookkeepers on the call. A no change letter means you got audited. We were actually talking about 1099Ks earlier and whether the IRS would audit because the 1099K is so different than the revenue that was actually on the books. And I explained why I don't think that's an issue. And also, even if it were an issue, they would send you a correspondence exam, which is a type of audit, and you would back up that one number, and they would give you a no change letter, which means we audited you. You gave us the backup that we needed. We agree with you, and there is no change. And that's what you always want. Every single audit, I'm going to knock on wood on this one, every single audit I've ever had to go through has been a no change. I'm very proud of that. Um, so that's what you want when you do get audited. And that's why the guy that I was mentioning earlier, the electrician who was getting paid so little because he was working so little, he actually was at risk for getting a letter from the IRS saying, wow, this is a big discrepancy. And we would just send them the reasonable compensation, the RC report, the actual full report, not just this benchmarking. And that would go away. It would be like, oh, you're right. Okay, my bad.
yeah, in our history, we have never had one of our reports successfully challenged by the IRS.
Really?
Yeah.
Paul,
Um,
you need to market that more often.
okay. Well, I just did, so got this group covered.
What did I say about sarcasm?
Uh,
Yep.
so, and that's proactive. Now, reactive, we become the voice of reason. Nancy, I don't usually talk about this either, but we get numerous referrals from the IRS when somebody gets audited.
Really?
Examiners will say, "Go get a report from RC reports. Come back and let's figure out what this number should be."
Oh my gosh, that's amazing. Who
So,
would have ever expected that? I had no idea.
yeah, we were surprised too when we were like, "How did you hear about us?" "Oh, the examiner sent us to you." I'm like, okay, great.
Wow, congratulations, Paul. I don't think there's any better compliment that you could get
So, no, getting referred to by the IRS, it does kind of ring true and not great in both
at the same
directions.
time. Yeah.
So, you want to run a quick report for Scott?
Yeah.
All right. So right down here, you can move into a full report for Scott.
And I know we're
And
getting toward the end of our hour. Anybody who needs to drop off, obviously you can pop back in when this recording goes up and catch the last few minutes of it because I want to make sure that everybody gets to see the magic in the system.
I'm running through this part quickly, but I'm going to come back to it. But you can let Scott do the interview on his own with a link. But we're just going to pop the interview open here.
And I'm going to make an
And
argument here. I personally believe that so much of the value that you're bringing to the client and also to your firm in being able to charge for this is if you have an interview with the client, you talk to them, you learn about their day to day, you will establish a closer relationship with that client. When I give my talk um, on how to use automation and technology in order to actually improve personal relations as opposed to watching them, disappear into the land of the bots. This is a good example that I always give is that having an opportunity to sit down on a Zoom with your client and talk to them about what they do on a daily basis. And we have a very funny example of what that interview can look like. I got to perform it on stage with Valerie Heckman from OnPay, which was a blast. She was the only person in the audience who raised her hand to come up on stage. She was absolutely delightful. And so we went through this. We go through this interview, and so I actually never do the option in RC reports to send the interview to the client. I think it's really important that we have that conversation with them. Also, I think that they can make really awful mistakes when they're trying to fill it out on their own.
agree with you 100%. I always like going through this with people. it cuts through a lot of the back and forth, but
Mhm.
you do have options to come in here and edit it if you do send it out to your client. So we limit this at 40 hours, right? Or for those of us that are self-employed, right, part-time. But funny story, if for off camera or some other time, Nancy, or if we have time today, we almost went out of business in 2013 because of 40 hours. We limited it to 40 hours. And we took a whole lot of shrapnel when that happened.
Really?
And
Why?
it's a short story. I'll tell you later, or if we
Okay.
have time at the end, I'll tell
If
you
we have
about
time
that
at the end. Yeah.
and the other court case. But
All right.
we were saved by a court case
All
actually.
right.
Um, so we need to know the location, and local is really important. Right, you don't want to be at the state or national level because I mean what people make across the nation varies significantly. Standard tasks, these are common categories that most business owners provide services in. I'm going to zoom through these just for the sake of time, but Scott does sales rep, unfortunately, his own bookkeeping. Let's see if we can fix that. That's why you go through
Mm-hmm.
this with him so that you can talk him into letting you do that.
Yep.
Purchasing clerk, office manager, right? These are what most business
And
owners
this is just
perform
the
tasks in.
standard. It's so much better than it used to be. I love your new interface. This is just this when you're going through and you're doing a report, this is what you're doing. I personally interview the client ahead of time and then I come in and do this so that they don't get to look at what I'm doing on this end and see the number and then want to change it afterward. I interview them ahead of time. I collect this information. There is a blank questionnaire that you have in your resources that I shared earlier that can be really, really helpful for having that conversation.
Yep, absolutely.
And then this is the section during that interview where you actually, most of the other things are like standard stuff that every business owner might have to do. And then this is what's specific to your business. So if we were filling this out for ourselves, we would enter bookkeeper, we would enter accountant, we would enter tax pro, et cetera, and so on.
Yep. So while Nancy was walking you through that, I just put in concrete finisher and maintenance mechanic. Last step, we just need to apportion out the time.
And this is
Yeah,
really, really important.
it
One
is.
of the things that happens that I do, and while you're going through this screen, I'll mention how we handle it personally. If I go through and I do a reasonable compensation analysis for a client, and the number turns out to be a lot higher or lower than my gut says it should be, I come back to this screen and I actually go to the report and I look at the two graphs, the two pie charts, and one pie chart says here is how much time you're spending on each one of these things. And then the other pie chart says here is how much you're being paid to do each one of those things. And it makes it really easy to get a quick check on which of, yeah, that's the chart that I'm talking about there. It's really easy to look at that and get a quick check on. So, for example, he's only spending 15% of his time on management, but 19% of his compensation is coming from doing managerial stuff. That's because managerial roles are paid more in general. That's just a thing. Um, Vice versa, the marketing, I think it is up there that they're spending a lot of time on. And then they're getting paid less for, you can see how these things, finances is not a very high value thing because this person's doing their own bookkeeping. And, according to the databases, the bookkeeping isn't valued as high. And so you can look at these and you can say, which of the, like, did I put in any role that is actually higher paid kind of work, or I put in how good they are at that work being higher or lower than they really are at it compared to an average person. So, one example I love to use is I have a client who swears that he's above average in bookkeeping. And I'm like, dude, You are an insurance agent and I am your accountant, and I promise you, you are not above average in bookkeeping. I need you to compare yourself to a professional bookkeeper, right? So I look at this report. If the numbers don't, if that like estimated annual reasonable compensation there at the top doesn't quite come out in an area where I'm like, no, I'm pretty sure I know better than the report does, it's because I made a mistake in how much time they spent in each job or how high paid, maybe I picked the wrong job. People are always calling themselves CEOs. Unless you have, a board of directors that, and you're a chairman of that board, and you're not, like, basically, if you're not Warren Buffett, you're probably not a CEO, right? Like, don't
We had
ever
to,
do that.
yeah, we had to put a warning on because people were selecting it, right?
Yeah.
It doesn't fit for what you do. You want to always look at the description.
Yeah, definitely. Definitely. And they're
So,
really good descriptions. I appreciate them.
so we came out with 91,257 for Scott, and we can pop back over here, and now we've got both numbers, and we're
That's
real
great.
comfortable with where he is.
So the wage benchmark, can you click back on that? Because I want to see what it picked as a number kind of in between. Suggested 91,388. Now let me go back to the report where you actually went through and you did the whole thing. It turned out to be 91,257. That's amazing. In this
So
case, the benchmarking was really close. That obviously
it
won't
was.
always be the case, but it was really close in this situation. And now you have the backup that you have to send to the IRS if if they're challenging it.
Yeah, yeah, because the report isn't just that first page we just look at. There's 8 pages here.
Yeah.
So it's thorough. There's sample minutes at the end. It's always a good idea to add this to your corporate minutes.
Yep. Not required, but a good idea.
Yeah. All right. So new feature wise, uh, Nancy, have you ever had a client? I know you require it, but have you ever had a client that's like, nope, I'm not going to do it, or be difficult, or somebody you've coached?
Not my clients because I would fire them. But yeah, of course, it happens all the time. And I decide we're not a good fit.
All right. So this
Yeah.
is down here a new feature. You can send an invitation to your client to accept or decline doing the report.
Ooh.
So
Oh,
that
that's
looks
going to
like,
save a lot of butts, isn't it?
so it'll be really nice to have that in your record. So this is what the client would get. Remember when I told you we're in beta and we're not quite there? Now you get
Yeah.
to see what's not quite there.
Okay, great.
Your client's going to link to a page like this that'll actually have more information on it. Like
Okay.
all the reasons you should do this, right? And then they can
And so your
decide.
client actually gets this, and the client, it will read whatever great information you have on this page about why it's really, really important to do a reasonable compensation analysis. But at the end of the day, if they say no anyway and they click decline, then you have a CYA as the bookkeeper or the tax pro to say, look, I asked them and they said no.
Absolutely. That's exactly what it's built there for. We really want to call it the CYA report, but
Yeah.
internally we have a lot of people saying that might not be the best way to go to market. But
Yeah, yeah, but we know what it is. We know
you
what it
know what
really
it is.
is. And now, one of the things
Absolutely.
that I talk about when I am presenting on reasonable compensation for bookkeepers is some bookkeepers will say that's not a thing that I have to worry about because the IRS is going to come after um the tax preparer. They're not going to come after me. Well, yeah, the IRS will go after the tax preparer. That's true. But the client and the tax preparer are going to try to point the finger in any direction that is not them, right? So you do have
Absolutely.
liability, maybe not to the IRS, you don't have liability, but you've got risk anyway, where the tax pro can say, well, I just do their return once a year. It's the bookkeeper who should have noticed this, or the client who says the same thing. So this is a good CYA thing for bookkeepers as well as tax pros.
Yeah. So you'll see it showing up here as awaiting acceptance.
Mm-hmm.
And so if they don't do anything, after 30 days, it will automatically default to a decline.
Oh, great. Oh, that's
Um,
great.
but if they come in here and they're like, Nancy, no way. Last time I took her advice, I had to pay taxes, right? So they decline it. This will be obviously have a little bit more information, but let's do a quick refresh here. Now
And
it's
now it says
declined.
declined. Nice. That really
And
is lovely.
yeah, and this isn't ready for prime time yet, but it'll give
Hmm.
you it'll give you all the specifics of the decline.
This is
So this is your
amazing.
this is your CYA report.
I love that you built something into RC reports that's for us. I mean, I really am excited about this. I won't have to use the CYA report that's not called a CYA report because I just wouldn't take on that client. However, I love that this is in there because I think this is a benefit for us. Something I want to mention is that when you do that interview for the client and you get to the final reasonable compensation number, it will lock after 30 days. It'll finalize. So you can still go in and change it around for 30 days, but then after 30 days, it locks. And that's one of the reasons that the IRS likes RC reports is that they can see that you did this in the past, that you did this and it was locked and you didn't go in and fiddle with the numbers afterward. So that's something I thought I should mention. What
Yeah,
else you got for
absolutely.
us? I know there's one
So
that I already started using that I'm super excited about. I don't know if you're planning on covering cloning.
cloning is out for everybody now.
It's
So
fantastic. I don't know if
uh,
anybody has knows about this, but it makes our lives so much easier. You take the existing report the last time that you did it for this client and you clone it, and then you just have to change the parts that have changed, and it's
yeah,
great.
yeah, and I don't have that on the screen just because I ran a 2026 report, so I can't
Sure.
clone it to anything. But yeah, so that was a new feature. Other features that you might like, Nancy, or folks on this might like, you can you can upload your clients now, which is much faster.
Oh, wow, that's really cool. Is that's not out yet? That's one of the betas?
It's in beta, yeah. So
Okay.
what I like about it is you can benchmark them on the way in.
Oh my gosh. Hold on. Let me make sure I understand this because I am nerding out big time. All right. So you've got a list of clients and it's in like a CSV and it's got a specific like you got first name, last name, company, email, blah blah blah. You got like,
Yep.
oh,
Yeah,
you've got the NAICS.
there's a template there for you.
There's a template. Okay, great. So you fill out the template with the client for information on all of your clients. You upload it to RC reports, and if you check generate bookmark or benchmarks on import, it'll actually go ahead and give you that range report for every single one of these.
There you go. They're over here on the
Holy
right.
mother of pearl. Shut the front door. Dude, where was this 10 years ago, Paul?
Well, 10 years ago, I was still in college, Nancy. I mean, come on.
Ha ha ha. Oh no, seriously, this is gold. I am not kidding. Now I want everybody. Okay, now I have an important question. I
Yes.
didn't ask you this beforehand. Is your pricing going way up because of all of these new things or no?
Nope. It'll be the
Okay.
same, but it'll be based on each client now than on reports because we offer more, right? We offer this whole flow now, right? So if
Well,
you were
just
going to
tell me
run,
yeah,
if,
what's your pricing looking like now? Because I
if,
mean, like for me, I'm like,
oops,
I would start with RC reports and upload all of my clients. But if how much am I going to have to pay per each client to get the benchmarking, for example? Like, how does that work?
same. So right now, if you buy
Okay.
one of our plans that's 10 reports, we'll be switching to 10 clients. It'll be the same price. You'll get a benchmark and a report.
Okay. So if I
So
buy 10 clients, and how much does that cost me per client? Or is it like how I can't remember because I'm so grandfathered in from so long ago that I don't even remember. I honestly don't remember any
yeah,
of it.
so
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 tell
right
us who's.
now, yeah, so 10 let's see here, let's
And do
just
you
do
buy
this.
packages of clients? And does it get cheaper if you buy more? Like, is that how
It
it
does.
works?
It
Okay.
does. This is our current plans right now, just FYI.
Okay.
But think of this saying reports just as clients,
Okay, great.
right? Because
Fantastic.
because we want to give you a benchmark and a report for each of your clients. So the pricing isn't going to change, just the flow that you saw is going to change.
Okay, fantastic. So this is basically $150 per client, and you
Yes.
get both the benchmarking and the actual full, you get the like automatic benchmarking if you upload them all in there, and then you get you just all the things. That's
Yep.
fantastic. And then you pay 149 for each additional report, and it
Yeah.
comes with.
Or you can just jump to the next one if you want.
And if you jump to the next one, then you get, it looks like there are some extra things you get on there. You get the entity planning tool. What's wage lookup?
Nancy, don't no,
I
don't tell me you
don't,
don't
I
know what
don't,
wage lookup
I
is.
maybe I just don't know. Maybe
So
I've used
wage
it and I
lookup is my
haven't.
favorite tool when I'm trying to zero in on what's going on with a
No, I have
report and
no
why it.
idea what you're doing here. I have no idea this even exists.
So you can query our entire database. Anything you want to
Really?
know, all the way back to 2001. Um,
Back to
so
2001.
yeah. So I want to know what a rickshaw driver in Boulder is getting paid.
I literally I had a guy who rented rickshaws to people. He was a client of mine. Like that's hilarious that you use that example.
So sometimes when I'm looking at a report in a challenge or in litigation, I'm like, what's going on? Why is this not making sense? And I'll come in here and I'll look for either other titles that might fit or just, it really just helps me zero in on doing some other things.
So when Heather McGovern, are you still on the call, Heather? When you and I were struggling so hard with that like divination person, I think she had to drop off the call. We were struggling in an Ask a CPA meeting. She like shared her screen as she was going through the RC reports process with somebody who was a divination person. She was like a tarot card reader, and we were trying to figure out like what the heck to call her. And there were various NAICS codes that made sense, but there weren't job roles. It's TAROT is how you spell tarot card. TAROT. Yeah.
I don't
So
remember
this
that
would be
one.
like a
No,
crystal
we don't have it.
ball person. Like what do you even call that person? Like we were
Yeah.
trying to come up with names and it was really hard. So instead of doing what we were doing in the interview, we could have just come in here and typed in every single thing that we could possibly have thought of and searched for different occupations.
Yep, absolutely.
All
And
right,
you
that would have
pick
been
your
handy.
year. And so this is used heavily in litigation because they have to go back multiple years. They do a ton of research, but it's also just a nice tool. And it's also a nice tool when you're just trying to help a client figure out what to pay somebody.
Yeah. Yeah, definitely. I like that too, because that's a way that we can add value to our clients is when they hire somebody, how much should I pay them?
Yeah. Entity planning tool, Nancy, this is the one you were just talking about.
Hmm. It's so much prettier than it used to be, by the way.
That's why we upgraded everything.
Yeah.
Uh, all right. I'm just putting a bunch of plug numbers in here to get started, but you guys shouldn't do this for free. So we'll put a
Yeah,
thousand
you should
dollars in here.
definitely charge people for entity planning and charge them for reasonable compensation too.
Yep. But what I like here is it'll give you an answer, right? Over 10 years, this customer will save $94,000. So
Super cool.
why wouldn't they become an S corp?
I haven't used this since you guys prettied it up. It's much nicer. This is great.
Oh, I think you'd love it,
Yeah, I know
Nancy.
I
And
would.
um, here's why. If you
Okay,
go
so you just
back into
finalize the
here,
report.
right, once it's finalized, you can run the entity planner in here,
Okay.
specific to Scott.
Oh, that's so cool. And then you put in all of this stuff
The other one was
and
just
it's,
a quick look, right?
yeah. And it's automatically pulling in the amount that you've already finalized. I
Yes.
see. Yeah.
But this is what I like about it because if your client's going to do something, they don't get really excited if you just talk about it.
But if you show them a pretty picture
If you
and you
show them
show
a
them,
pretty picture and then send this to them and say, would you like to do it? I can save you $96,000.
wow,
And here's why. They'll probably say yes. And if they say yes, your $1,000 is already in here.
that's amazing. I love that. So you've shown them ahead of time that you're going to save money even even with paying me $1,000. You're not giving
Yes.
this to them and then saying, and it's going to cost you $1,000. I love it.
Well,
That's
yep.
super smart.
Well, and your proposal should include your payroll for doing this, right? So you've
So
already got
yeah,
that
Tao
revenue built
Lei is
in.
asking, she is asking, we've got a couple questions coming in.
Yep.
Which subscription level do you need for this simulation, the entity selection planner? Was that the middle? Is that 20? You have to sign up for 20 reports?
Yes, that was
Go back
20,
to
but if
that.
that's too many, reach out to me because I can turn it on for you.
Oh, so let's say somebody wants to do the up to 10 reports version, but they're one of our amazing people. You're going to say, we'll give
Well,
you the
yes.
entity planning tool because we're
Well,
awesome.
they'll also say I want benchmarking and all the stuff
Yeah.
today, and then we turn everything on. And you literally have
Oh, so we get the
everything,
platinum.
including all the stuff that doesn't work yet. So,
Yay! Actually, that is kind of fun. So everybody who is in our group, they get
oops, there
um,
we go.
woohoo! Oh, that's a better discount than with my regular link.
Yeah, absolutely. For
I
today, everybody
love
coming out
it.
during tax season, 25% off. We don't offer this very often, and I hope it doesn't land as trivia, but Nancy and I have known each other a long time, and we go to the mats for each other when it comes to that. And the fact that you guys are part of Nancy's group, we wanted to do something above and beyond. Matter of fact, you can see it says 15%, it's 25%,
Oh,
right?
wow.
The
Dance
slide just didn't
25 is
get
actually a
updated.
25%.
It's
Oh
actually
my
a
gosh.
25%. Yep.
How good is this deal for? Because I want to make sure that everybody in my group finds out about it. Um,
You know what? I can put an end date up whatever you want. Right now, I think I put March 15th on it for y'all, just to give you some time to maybe do a demo if you want.
yeah.
But I can
That
extend it out,
Can
Nancy.
you make it April 16th? Because that would give me enough time to mention this in the next couple of sessions and tell everybody because they're going to have to find time during monthly or during annual closing season because people think tax season is for tax pros. Well, the bookkeepers have to get the books done and give them to the tax pros. So it's our busy season too. And so they're going to need to find time to go back and watch this replay to see what it is they're getting. So if you would be so kind as to make it April 16th, I know you're already giving us a really great deal.
Yeah, not a problem. I will
Oh, thank
absolutely
you.
change it to that.
Awesome. Fantastic. Oh, that is great. I will make sure everybody finds out about it. I'll mention it at the beginning of each of our next every single one of our sessions between now and April 16th. I'll even mention it on April 16th since we have a session on that day, which is
Oh, that's
fantastic.
that's the champagne one.
Yes,
So
exactly.
yes.
We've got another question, and this is coming for Dina. She says, I'm trying to convince a realtor client to revisit her salary, but her CPA keeps telling her how much more tax she'd have to pay if she raises that salary, which is so low right now that it's scaring me. I'm just working with AI right now to talk through some aspects of this, and it's talking about some things specific to real estate professionals. Does RC Reports take industry specific factors into account? Yes. Can you go back to the NAICS code uh, in your, yes, when you're doing the report at the very beginning of doing a report? Do you remember, Dina, when I was saying that the NAICS code is the North American Industry Classification System code, which is really granular? So when you're in here, you would select the NAICS code for this client and you would make sure, do you see it says real estate, rental, and leasing? And then underneath it, um, yeah. Oh, she's referencing things like having a team or not having a team. So that would go under the the benchmarking. Well, there are a couple different ways this comes into play. Dina, you should ask about this in Ask a CPA in Circle, and I will answer some of these questions because these are great questions. So one of the answers is you're picking your NAICS code to make sure that we're looking at a wage database for the correct industry. Secondly, when we talk about what jobs you are doing when you're not the one person doing all of the things, right? We're going to pick during the interview what hats they're wearing, right? So that makes a big difference. And the more people that you are managing, probably the less work you're doing in real estate, right? Because those people are doing those jobs. And thirdly, in the benchmarking thing that he was showing us earlier, it actually asks for how many employees are in the company when he was doing the benchmarking. So that's a new thing to me that I have to play around with, but that clearly has something to do with it.
Yeah, and the reason we went with employees is because the IRS has that information in their files. So we
Yeah,
had to
that
go
makes
with
sense.
stuff that they could pull in without having to
Mhm.
send out a questionnaire. And so that was a bit tricky,
Super
but
smart.
we figured it out. Yeah, so we take industry into account, and then we take into account what you do specifically for your business. So if you type in where they're located
In the wage lookup.
in the wage lookup, it'll give you 10,000 feet. It's not the number, but it'll give you some idea of where they should be if they were a
Mhm.
full-time employee.
And that would be really handy for if this person running this firm were hiring somebody as, a real estate, whatever. But this person who runs the firm, they may not actually do anything in real estate. They may be spending all of their time in management or marketing or any number um, of other jobs that they might be. Oh my gosh, there's so many real estate things in here. Oh my God, this is so cool. So, proficiency, how much each. So, if they are a real estate agent, which is actually the example that we go over in the um, 2 hour session that's in Ask a CPA, he's a real client of mine and he's a real estate agent. And I showed you his real, we walk through, uh, we'll call him Pete since that's his name. Um, and Yeah. So if Pete is hiring a real estate agent and they're spending 100% of their time doing real estate and they're new to the industry and they're in Boulder, Colorado, then they might want to offer that person $45,000, $46,000 a year. If it's Pete doing this full time, he's probably going to be making, $168,000 a year. My Pete is making a way more money than that as far as his company is concerned because he's got a whole team of real estate agents. He's one of my oldest clients. And so I did reasonable compensation for him when he was just starting out. And we do it every 2 years. And every year, his W 2 is staying pretty close to the same because he spends a lot of time on the golf course, but he's hiring more and more people to do stuff for him. And so the company makes more money, but he's getting pretty close to the same W-2 year after year after year because he's not doing any additional work um, different than he was, the prior year. So that's great. Great stuff. Paul, this has just been wonderful. It was eye-opening for me. I learned a lot because there were some features in here. I didn't even know about the wage lookup feature. I knew it was on there, but I didn't think I needed it. That's super helpful. I love the new updated entity selection planner. I'm super excited about I love cloning. I've already started using that. I'm excited about the CYA report that's not called the CYA report and the benchmarking. Um, and I am extremely delighted by the 25% off coupon you've given us and allowing us to use all of these features, even the beta ones, at any level. This is just absolutely incredible. And I'm so grateful to you. I told everybody that he was really generous before I even started the call.
So,
Thank you, Dina. Thank you, Anne.
yeah.
Everybody. Oh, wow. We're getting some people saying, like, Anne is like, this was so great. Thank you, Paul. I was super nervous about ever doing this, and now I'm rethinking it. And Dina says, thank you both so much. I have to run to an appointment, but this was great. I agree. This was great. Paul, you're a real mensch, and I'm really lucky that you're in my life. Thank you for doing this today.
Absolutely. Real quick note,
Yeah.
to get into beta, just reach out to me or anybody on my team
Okay.
and we'll get you in there. We'll want to run through a couple of things with you if we can, just to make sure you've run into any issues or see anything that isn't
Yeah.
quite ready yet, like the accept decline feature isn't quite ready for prime time, but all will be so by April 16th.
Is it okay with you if I put your email address in um, the recording? That would be members only that would have access to it.
Yeah, absolutely. It's
Great.
right here as well.
Fantastic. All right. Fantastic. I will do that. Thank you again. I'm going to end with our not only wonderful thanks to our incredible guest today. Thank you, Paul, for your generosity and your time and your knowledge and expertise. But also, we have a tagline that we always use when we're closing out, which is that knowledge is power. So please keep asking questions. And we will see you next time. Have a great day, everybody. Bye bye.